Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us is Jeff Kilburg. He's the founder and CEO of KKM Financial to show us how advisors can utilize the BlackRock iShares ETF Model Portfolios powered by Nasdaq Dorsey Wright in volatile markets. Jeff, it's great to have you with me. As always, didn't think we'd be doing this virtually, but here we are. And before we get into a couple of your slides here, let's just get your overview, high level, markets now. This is certainly unprecedented times.
Well, Joe, thanks for having me. And yes, we had to adjust our interaction here. Hopefully we get back in the studio at the Nasdaq market site in Times Square, New York, sometime sooner than later. But it has really been interesting. In the wake of the pandemic, in the wake of the coronavirus hitting the United States, we saw the month of March, the volatility. It was true panic in the tape in a couple sessions. It's really been interesting. We saw that 35% drop, the quickest drop in the history of the stock market. And since then, we've seen a lot of movement and going on. And the catalyst initially in that was potentially it was oversold, Jill, but I really think the way the government responded, the Treasury, the Federal Reserve, we saw such a swift and immediate response. We saw more activity and more push towards this from $1 trillion perspective than we saw in QE 1, 2, and 3. And that was all done in such a small timeline. We saw a reversal in the market. So after diving down 35%, we've seen a nearly 35% retracement. Of course, that doesn't get us back to where we were on the all-time highs at February 19th. But Jill, it's really interesting to see this rally back. A lot of people have been caught off size on this rally back, but it's been a dislocated rally. And that's where I think it really makes sense to have an understanding of how you can implement a tactical view on the market. Because when you see such a dislocated rally back, you're seeing financials lag, you're seeing small caps lag. You really want to have a tactical approach, and utilizing the technical portfolio construct powered by Nasdaq Dorsey Wright makes a lot of sense. And why it makes sense, Jill? Because there's so much noise. There's so many headlines. We continue to see so much noise in every minute and every hour of the open market. So here, by using a technical approach, you can mute that noise and rely upon the technicals.
All right, let's take a look over here. Tell us about model portfolios that are powered by Nasdaq Dorsey Wright, and then specifically we will get into the tactical rotation model.
Yeah, so we're really excited about the iShares ETF model portfolios powered by Nasdaq Dorsey Wright. Let's rewind back to 2002, Jill. That's when BlackRock initially hired Dorsey Wright in Richmond, Virginia to establish these ETF model portfolios. Pretty forward thinking for 2002, but the whole idea is to utilize relative strength. Dorsey Wright is the relative strength guru, and utilize relative strength to have that technical approach to portfolio construction. So where we dive into some of the models that are constructed with iShares, we get excited here at KKM because we license these models from Nasdaq Dorsey Wright. And this is the first time these models, which have lived in research format, like I said, since 2002, Jill, now they're an investable turnkey solution. But the iShares tactical rotation model has always seek to mitigate risk. But what we did see in the month of March, it had the ability to mitigate risk because of that relative strength component where it's constantly on a weekly basis, Jill, analyzing fixed income against the equity markets.
All right, and if we take a look here, it's also using that technical approach, particularly point and figure, in identifying positive trends and negative trends.
Well, that's exactly right. So to kind of drill down a little bit further here on the iShares tactical rotation model powered by Nasdaq Dorsey Wright, you see two levels of relative strength analysis. X's and O's. This is fifth grade math. We get really excited how simplistically elegant this process is. But the two levels of relative strength analysis, which is conducted on a weekly basis, it's a relative strength chart between the U.S. equities and the fixed income market. Then once we get an understanding of what is in favor, well, if it's 100% equities due to the fact that equities are favored over fixed income, then you see that 100% exposure to equities and commodities in 8 positions. However, like in the early month of March, the fixed income was favored on the relative strength chart over equities. So you saw that reduction. We saw it go from 100% equity exposure and potential commodity exposure down to 70% and established a 30% position in AGG, the bond proxy. So that really helped mitigate some risk. And that's really the story of 2019 as well as 2020 and how well the bond market, specifically treasuries, have done. So regardless of the allocation, we're going to see this specific model hold 8 names. So we get excited that these 8 names, these are specific sectors that we want to own versus some of the specific sectors we don't want to own. So you look at names like gold or even tech, even the consumer, and recently biotech. We're seeing a global sense of urgency rush into biotech, trying to find a vaccine for the coronavirus. So these are the sectors that this model seeks to own versus some of the model names or some of the sector names like the energy or the big banks, which have fallen out of favor in recent months.
Yeah, and if we take a look at a couple slides here, this is the actual asset class allocation that's within this portfolio, as well as the current holdings.
Yes, and so it's interesting. The model has the ability to take a position in the commodities. So right now, the model currently owns gold. Gold is one of the few asset classes, Jill, that's up on the year, up nearly 15%. So having that diversification inside this model does have the potential to mitigate risk. But the asset allocation here is interesting because we're seeing this sense of urgency, like I discussed, but it's all we talk about. How can we get a treatment? How can we get a vaccine? What's the PPE surrounding how we reopen the economy? Is it going to be phase one, phase two? But that all surrounds medical devices and biotech. So two of the ETFs that the model currently holds is IHI, that's the iShares medical device. It's also IBB, which is the biotech. But this really comes in an interesting model portfolio, which is a turnkey solution. But lastly, I want to talk about the IAI. That's one last holding. When we talk about the broker and dealers of security exchanges, what have we seen in the wake of this pandemic, Joe? We've seen increased volume. You've seen a lot of interest in advisors globally repositioning portfolios, shaving some exposure, increasing other exposure, and that's all done in the securities exchanges and broker dealers. So that IAI makes a lot of sense moving forward to have exposure specifically to that ETF.
All right, Jeff, and to wrap up here, kind of what you're looking for over the next 3 to 4 weeks as we're in the thick of earnings seasons, and of course, how we can get in touch with you.
Well, I'd be remiss if I didn't talk about tech, right? Next week,
right.
we have the heart of the earnings season. We're seeing 140 names come out in the S&P 500. So we're looking for visibility from Facebook, from Google, from even Amazon, which has been a winner year to date. But I think short term, Jill, I think the risk to the market is being underinvested. I think the risk to the market is all the people who went to cash. In short term, I think we continue to see momentum in the market. We have such wind in the sails from the central bankers here at our Federal Reserve. But think about the global central bank commitment that we haven't even seen in the marketplace yet. Therefore, I think we have to go back to the great financial crisis and remember how much wind in the sail actually was put into the marketplace subsequent to those inflows coming in. So if you're looking to get in touch either with KKM Financial, you can hop on our website, kkmfinancial.com, or you can reach out to us directly by sending us an email, info@kkmfinancial.com. We also do have a website, Jill, kkmmodels.com. There you can do a lot of due diligence on these ETF model portfolios powered by Nasdaq Dorsey Wright. And the whole team at KKM will be more than welcome to take a phone call and help you better understand how this potentially mitigate risk for you moving forward.
All right, Jeff, thanks so much for joining us. Hopefully we'll get you back in studio sooner than later.
Stay healthy, Jill. Thanks so much for having me.
Thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.